But we begin this morning with what's happening in the cryptocurrency space. Again, as we mentioned, we see the majors under pressure. Bitcoin right around 30,000, Ether back below 2,000. Obviously, over a longer time frame, these cryptocurrencies are up a significant amount. But so far this year, we are now approaching Bitcoin basically being flat for 2021 in a year where there has been a lot of attention on the space. And joining us now to talk a little bit more about how to think about these crypto moves is David Grider. He's the lead digital asset strategist over at Fundstrat. David, thanks for jumping on this morning. I'd love to just start with kind of your thoughts on how you guys are thinking about the most recent price moves and the conversations that you're hearing from clients as we've seen, the 60,000 exuberance has been out of the market for a little bit, but there had been some stabilization before we're kind of looking at this latest slide.
Yeah, absolutely. Thanks for having me on. We, obviously have seen quite a bit of volatility in crypto as of late. And as you mentioned, it's been a very strong market in 2020. And I think we had a lot of macro factors that were driving us higher and great stories. And I think that kind of turned in Q2, obviously, of 2021. And what we've seen with the latest sell-off is over the last week when we had the Fed announcement, I think a lot of risk assets and a lot of folks that took the Fed's commentary and the dot plot specific is potentially looking at more hawkish view on what it could mean for their policy. And I think some risk assets got hurt by that. And I think that was, crypto included, but we've seen other assets rebound since then. And I think that the last couple of days, what's been driving crypto and this divergence has really been what's been going on with China. And there's been quite a bit more crackdowns there or regulatory scrutiny that's been kind of coming out of that. China taking some additional measures. We know that it's been not legal to, invest in Bitcoin and crypto there for some time, but they're getting a little more strict and clamping down on things from mining to doing some things with some of the exchanges there to very lately, yesterday, in fact, some of the OTC desks, the government was shutting down access to the banking system. So that's what's been kind of sparking the sell-off that we've seen over the last couple of days.
David, what are the chances that Bitcoin gets cut in half over the next month? Because I'm not sure about you, but I don't see any upside catalysts. I see fears of increased regulation. I hear the likes of Tesla CEO Elon Musk going out there tweeting, voicing his concerns about the what Bitcoin is doing to mining. Why can't it be cut in half?
Yeah, I don't want to make a prediction that it'd be cut in half or not over the next month. I mean, there's definitely a lot of volatility that's always possible in crypto. I think that what we're seeing in the market is I think a lot of institutional folks, a lot of people who had kind of missed the early part of the rally have actually been buying this dip. I think there's a bit of exhaustion. Maybe some folks are with dry powder looking at your market. Maybe that's fading a little bit. So, that's conversations we're having with other firms and other desks to get kind of market color there. I think you're right. We do need some catalysts to kind of emerge to take us higher. I mean, the currency thing with some of the Latin American countries, that was, the adoption, that was one thing. El Salvador, that was kind of took us a little more bullish for a little bit. But I would say that the market tone is very bearish right now. I think we went from very exuberant to very bearish. And I think that, also if you have to think about kind of when markets are better to start adding and increasing exposure, it's usually when folks are scared and not looking to buy. I think that's one thing to always keep in mind as kind of a sound investing principle.
David, it feels to me like folks who are in cryptocurrency, it's a little bit like gold in the sense that you're always going to think it's going to be going higher. I mean, I don't think we have a equivalent term for gold bugs quite yet. So as someone whose firm has been pretty bullish on Bitcoin pretty consistently, like what do you do at a time like this? And how do you try to be unbiased when you're looking at where the price action is going to go next, when so much is riding on Bitcoin going up?
Yeah, I think that's right. I do think that the long term, if you look at over the next 3 years, I think the thesis still is very strong. I think we have to really underwrite our thesis. When market conditions change and when prices kind of go, against your thesis, it doesn't mean you have to sell or it doesn't mean that you're wrong, but what it means is you have to underwrite your thesis again and you have to reevaluate, do those fundamentals still hold? I think from the macro picture, some things have softened that we were looking at, but I think there's still a number of macro factors that still remain really accommodative for risk on assets like crypto. I don't actually view crypto or Bitcoin really as purely digital gold. I think that narrative plays for some folks, but there's a lot of other ways to think about this from tech adoption thesis. And there's this crypto economy. I think what you're going to start seeing with the fundamentals of the crypto economy is people are going to start differentiating a bit more, just like they are in the traditional economy here, with different sectors that are going to outperform when you have a reopening. So if you look at some of the cloud native platforms, right, the Ethereums of the world, these things are doing massive amounts of revenue and transaction fees. A lot of the fintech DeFi application platforms, these things look a lot like digital banks in the terms that they're equity like, and they have price to sale multiples that are in line with traditional fintechs. I think that you can see some of that economy start to get differentiated as the market gets a little more mature and a little more sophisticated. But obviously, Bitcoin being such a big piece of it is going to really be the main flow indicator. And what you've seen now is kind of indiscriminate price action kind of corresponding with the selling in the broader market.
David, I'm also curious how much you guys are looking at the technical setup, in the charts for all of these, because I think, what has so many folks from our more traditional finance world interested in cryptocurrencies is that they are such a pure technical setup so often when you just look at the price action. And I'm just curious how much that plays into your guys' process, and if so, what you've seen there in the last month or so.
Yeah, I don't spend a ton of time on the technicals myself as much as I do on the kind of fundamentals and the flows and what the markets are kind of telling me across different areas of the market. I can say that, I think a lot of technical strategists were looking for kind of 30,000 as the level. And I think people were worried kind of if you broke below that, what happens, and if you get a sustained break below that. But I think, we're still thinking that we've been holding up very well in this sell-off that we've seen. We've seen a lot of the crypto market deflate a bit, but we've also seen Bitcoin kind of gain some consolidating of really gaining back its market dominance, which is its share of the total market cap. So money's flowing there as kind of the lowest beta, and it's kind of been able to hold up above 30,000. So, I think that's been encouraging.
All right, David Greider, lead digital asset strategist over at Fundstrat. David, really appreciate you jumping on short notice this morning, and I hope we'll stay in touch.
Thanks a lot.